You're projecting in 5 years, Bitcoin hits 3.8 million per coin. That's 5 times the market cap of gold, which has hit an all-time high.
I feel as though a rubber band has been stretching for the last 4 years, and it let go. The truly disruptive innovation we would expect, now we did this chart at the end of last year, during the next 5 years to deliver a compound annual rate of return of roughly 50%. Our portfolios are volatile. They don't look like the benchmarks. And I just want to say, we do what we do, and that's what our advisors expect. That position size, when we did that analysis, was 19% of a diversified portfolio. I have more in mine.
In today's video, Cathie Wood lays out her bold outlook for Bitcoin and disruptive stocks, and why she believes we're entering a new era of exponential growth. She explains how AI, blockchain, and innovation stocks are set to outperform the old giants, and why Bitcoin could soar past $1 million as institutions and corporations move in. Cathie also breaks down ARK Invest's strategy for navigating bull and bear markets, and how retail investors can finally gain access to the kind of innovation once reserved for Wall Street elites. And don't forget to join our Telegram group for daily Bitcoin and market updates, links in the description below. Let's jump in and see why Cathie thinks the real bull market is only beginning.
The Mag 6, some of them will do well. Some are facing headwinds. Apple's in the AI space are well documented. And now we think it is truly disruptive innovation's time to shine in the market. I feel as though a rubber band has been stretching for the last 4 years, and it let go with the election of Donald Trump. That's when truly disruptive innovation started to shine, and the stock market started to broaden out from the very concentrated Max 6 strategies into much more widespread disruptive innovation. In other words, risk appetite and time horizon is starting to extend here. And I think the tax package, especially the corporate tax cuts, which most people haven't focused on, full depreciation of structures first year they're put in service, full expensing of equipment, R&D domestic and software in year 1. These are huge, huge incentives to invest now. And I think that's exactly what's going to happen. And you can see the difference here. The truly disruptive innovation we would expect, now we did this chart at the end of last year, during the next 5 years to deliver a compound annual rate of return of roughly 50%. Now we've had some of that, so maybe it's 40 to 45% compound annual rate of change. And this is in the public equity world. In the private world, just wait until you see. With that, disclosures, of course.
They know the disclosures.
They know
Ladies and gentlemen, Cathie Wood.
Cathie, join us.
Thank you.
Good watching set.
Thank you.
Thank you so much for coming. I know you're very busy.
My pleasure.
You're projecting in 5 years, Bitcoin hits 3.8 million per coin. That's 5 times the market cap of gold, which has hit an all-time high. Walk us through the math here.
So I'm going to just correct that a bit. So,
okay.
Our official for bull case is 1.5 million.
Okay.
Now what got us to that 3.8 is using modern portfolio theory. If we were to include Bitcoin in portfolios at its optimal weight, so maximizing the Sharpe ratio, that would have provided that increment to 3.8 million. Now, believe it or not, that position size, when we did that analysis, was 19% of a diversified portfolio.
That's a lot.
That's a lot.
Yeah.
I have more in mine.
Well, you swing for the fences. When your cousins, when civilians ask you, hey, how much Bitcoin should I own? What's the number you would say in private to a family member?
To a family member?
Yeah, you want to protect them. You're not like, hey, we're swinging for the fences. This needs to be our home run. But
I'll tell you what I've told my children for a long time now is average in. I mean, average in. Every month, just average in, and then I would leave it to them in terms of their comfort factor.
Got it.
Cathie, can I ask you about?
Yes.
So ARK has this ability to be a vehicle for a lot of folks that are just living their normal day-to-day lives, and they want the answer to what is going to do well in the future. And
Yes.
they can go and they can buy your ETFs, and then they can participate in that future. There's a lot of people that are frustrated, palpably frustrated, with an inability to sort of get ahead and break through, build wealth. First, what is economically happening in America that prevents so many people? What do you see, number one? And then number two, what characteristics and responsibility do retail investors have? If they're going to YOLO this, and if they're going to buy this other thing, and they're going to try to go further out on the risk spectrum, what is their responsibility so that there's no crying in the casino?
There are ways to access innovation, and one of the questions, many ways, of course, we have packaged it up. We don't look anything like a traditional benchmark. So if they're diversifying, we're a very good source of diversification, especially in trying to get exposure to innovation. We also have a venture fund. One of the questions I get regularly from retail investors used to be, why can't we access the private markets? We know more about those technologies than most of the institutions who are buying them. They have no idea. We're passionate about it. And so we've gotten more vocal, and this administration is certainly becoming more vocal and more focused on this particular idea, because it is un-American, right? You have to meet this threshold.
Well, you use ChatGPT every day, but you can't buy OpenAI.
Exactly.
But you can buy a lottery ticket, or you can bet on sports.
And it makes no sense.
Right.
And I do think it's going to change, and I think this administration
How
will
should it change? Should we just have, and I've advocated for this before on the pod, and I believe you've talked about it, 6% of the country, 5-6% are accredited. You got a small number who are QPs. Should we just have a test? You get a license to own a gun or drive a car, cut hair in this country. Why not just have a simple accreditation test? You understand diversification, you understand private versus public assets, how to read a balance sheet. Wouldn't that just solve the problem right quick?
I mean, I used to say, it would be, what we're doing in the investment world right now would be the equivalent of saying, you can't drive because you don't make enough money or you do not have enough net worth. Take a test.
Take a test. And we have this big question in the country about polarization of wealth. 50-60% of the country has some exposure equities, but the people who don't, they tend to trend towards socialism or handouts. Maybe they don't feel they're part of what we experience, which is we meet great founders and you get to do public and private, and we get to say, yeah, I drove in a FSD car when Tesla was private or whatever it is, or I looked at Coinbase when it was private, or Uber. Yeah, I got the sense I want to put 1 or 2% into that.
Yes.
Yeah, it does feel profoundly unfair, doesn't it?
Yes. Yes.
Cathie, there's a lot of market signals right now that are flashing green. There's a lot of market signals that are flashing red. Do you feel that you have to position actively to all of those things, or do you say, you know what, I can't control this, I need to look 5 years out? So how do you manage the risk, and how do you view the markets today?
Yes. So the risk question, obviously we get a lot because our portfolios are volatile. They don't look like the benchmarks. And when markets get into a bearish period, investors tend to hug their benchmarks, and we're moving in the opposite direction. So I just want to say we do what we do, and that's what our advisors expect. They don't expect us to raise cash or do anything. That's their decision, right? In terms of what we do to control risk, during bear markets, we will concentrate towards our highest conviction names. We have a scoring system based on management, execution, moat or barriers to entry, product service leadership, valuation importantly, and thesis risk. So with those scores, we concentrate. During bull markets, which I do believe we are in a bull market that is broadening out, we tend to diversify because the IPOs start appearing again, and we have more information on some of the companies we've sold during the bear market.
Cathie's vision reminds us that we're standing at the edge of a massive financial shift where Bitcoin, AI, and disruptive innovation redefine how wealth is built. If you found this insightful, make sure to like this video, subscribe, and turn on notifications so you never miss our deep dives into the future of money and markets. And join our Telegram community for exclusive Bitcoin insights, ARK updates, and daily market intelligence links in the description below. Until next time, stay curious, stay bold, and stay invested in the future.